Hello traders, this is a Racy Scalping trading. The markets that just opened, and I'm looking at the Dow Jones Index. I would like to apologize to traders because I'm not very well, and I try to sit down a bit to do something, okay, to cheer myself up. And I'm looking at the Dow Jones Index, all right? It's just very racy right now. So I'm going to try to see what's happening here so we can look for a scalping trading setup, all right? So I'm back on the 3 minute, now I'm on the 3 minute time frame, but I want to bring you back to yesterday when we were talking about, okay, a Fibonacci trader, blah, 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 something to do with scalping trading. So I was telling you about this pattern here. So the price went up, okay, that's an impulse move, all right. A price went from point A to point B, and now it pulled back without canceling the prior trend. This is about the Fibonacci pattern. I explained yesterday to you that when a Fibonacci pattern is being formed, one cannot guarantee that the pattern will be completed. So we are monitoring the pattern one step at a time. If the pattern is developing, we will take advantage of it. Sometimes the pattern may not be formed, or it may fail completely, or the price may print something that is completely different. So as I showed you yesterday, all right, here it is. We call this point X for X-ray. This point we call it point A for alpha. This point here we call it point A for B. And this is the point C. Now, if you continue to go down more, I have to move this point C because it's still brewing on the 4-hour time frame of the Dow Jones Index. All right. So this is what I want. So my expectation is that at one point the price will resume going up if it is about to form a Fibonacci pattern. All right. The point D is at 88.6% Fibonacci retracement of the SA. So because of this retracement of A to B in relation to SA, is at a 50% Fibonacci retracement of SA. The two Fibonacci patterns that are coming to our mind are the bat pattern and the crab pattern. All right, doesn't mean that the price will definitely form a bat pattern or a crab pattern. Now let's go back to the expectation that it may continue to go up more. All right, so I'm going to go now on the 3-minute time frame. I am ready to sell and ready to buy. Okay, so do never come into the market and have a single mindset. Okay, you want to be ready to buy and ready to sell. All right, so but though I am ready to sell and ready to buy, my first priority is to look for an opportunity to buy if there is an opportunity to buy. Okay, all right. So here it is. So on the 3-minute time frame, you can see that the price was on this declining channel, and now it breaks above it. So if it's going to go up, it must form what? According to the definition of the price action, it must form higher lows and higher highs. You have to understand that though I am on the 3-minute time frame, I'm not making my decision on the 3-minute time frame alone. All right, so I'll show you what is happening on the 4-hour time frame, and this is because of what is happening on the 4-hour time frame that I'm coming to the 3-minute time frame to look for a clean cut entry point. So in my mind, okay, you see, it start running like this. It may continue to go up like this. I don't like that. I would prefer it to bounce up a bit, but it's just going up, because of the bearish traders coming out of their trade. As I explained to you yesterday, we were looking for convergence signal, but as the bearish traders were coming out of the bearish trade, if the bearish traders are coming out of the bearish trade, they must buy. All right, I was trying to take advantage of that convergence trading signal. But what was happening that time is that the bullish trader were not in the market. So the price did not bounce up as we were expecting. All right. So the convergence signal will become very, very interesting if both bullish and bearish traders are doing the same thing. And yesterday, though the bearish traders were coming out of their bearish trade by buying back their position, the bullish traders were not there. So what we are seeing now as the market is open now is more activity of the bearish traders, okay, that are coming out of the trade. So those who did not close their trade yesterday, they are coming out of the trade. So it may take us up to 30 minutes before we may see a clean cap pullback. You see here. Today is the 13th of August 2019. The time is 46 minutes past 4. So it may take us up to 30 minutes, up to 3 o'clock London time, 3 p.m. London time, before we may see a pullback. So this is what we call the market adjustment. Market is just open. Those who were selling yesterday, if they didn't close their position, they are now coming out big time, creating this vertical price move, and so on and so on. And all kind of things are happening during the first 30 minutes. So you can see that they were a bit greedy here. The price is just going vertical, making it a little bit difficult for me to enter the trade. Normally, I can enter the trade here, above this high here, but I missed that. Okay, normally I can do that because you see this candlestick bar was bullish. Now it pulled back a bit. I can place my limit order, not market order, to buy at 26007, but I missed that. Okay, that would be nicer if I did, but I missed that. So they are running away. So I have to look for another entry point. I don't want to chase them as they are running away like this. So I need to be a little bit patient. So what I'm going to do now, talking about scalping trading, a Racy. You see that the price running very fast. That's why I'm using the word Racy. All right, R-A-C-Y, Racy. Okay, fast price move. Okay, now I'm going to apply Fibonacci retracement to this price move from here to here. Why? Because there's a key level that we call the 50% Fibonacci retracement level that is dividing. Okay, this is the 50% Fibonacci retracement that is dividing, okay, this price action, okay, from here, okay, to here. Okay, so because now we are, you see, it went above the 50% zone, it means that the bullish traders are controlling the price. So I may look for, I'm choosing my word carefully, I may look for an opportunity to sell if I see a kind of a weakness, okay, after this move up. So these are profit takers. People are taking profit now, and the price going now. We are now at 61.8% Fibonacci retracement of this price action from here to here. So the zone between the 50% and the 61.8% Fibonacci retracement level, that's what we call the sweet spot zone. So if you do not know or you never heard about the sweet spot zone, this is it, between the 50% and 61.8% Fibonacci retracement level. Because the dominant force is bearish, because the price was going down, there will be some selling in this zone. Though my original intention is to give priority to buy signal, I told you I am also ready to sell. So I'm going to watch them carefully here. If they are seeing a bit of weakness here, I will sell them down. So what I'm going to do, I'm going to wait patiently. You see how they are selling now in that zone. I'll wait for them to see whether they're going to drop it down a little bit more. Then I will decide how to sell it down for the first time. Then I will look for an opportunity to buy. So I'm ready to buy and I'm ready to sell. All right. So I've been talking to you now for how long? For 9 minutes. So when we are doing a live scalping, live day trading, the video can be very long. Yesterday, we were almost 55 minutes long. All right. So this is it. Those videos are not short tutorial because we want you to see everything so you may learn from it. All right. So now they are pushing it up. So what I'm going to do now, I'm going to go quickly to the daily chart and see where we are. You see that on the daily chart, they are approaching a key level here. You see here, they're approaching that. Okay. All right. That's what you have. This is okay. Are you getting it now? All right. They are approaching the median line of the pitchfork tool on the daily chart. That's why we are looking at use a different time frame trading method. Because if you're on a 3-minute time frame, you are seeing the lower time frame. It's only a portion of the whole picture. If you want to see the bigger picture, you need to go to the higher time frame. So now we are going a little bit above it. So the market just opened, it just going up, going up, going up, going up. I hope they're going to be nice to me also, to allow me also to get in. I'm waiting to get in. All right. So they went above the sweet spot zone. Now we are now at 78.6% Fibonacci retracement on the 3-minute time frame. All right. So we're going to watch them. So what I'm going to do, I'm going to quickly trade what I'm going to call a speculative trade to sell. Okay, speculative trade to sell very fast. Call it at 26287. This is a risky trade. All right. We will see what's going to happen. And I will use for that trade only 15 pips. Now I'm now in that trade. 26287. So I'm now in that trade. And I will use 25 pips. Is that 25 pips? So hold on, please, traders. 25 is 13 plus 12. Okay, my stop loss somewhere there. 25 pips. Normally, I told you yesterday that for the Dow Jones, I like to use, okay, I like to use 30 pips stop loss. But again, today, you understand, I'm taking a little bit of risk. This is what I call speculative trade. It's a bit risky, but it may work beautifully. So I'm now in this trade at 26287. We are now, you see how fast it's dropping. I'm going to move my stop loss to 26262. So you understand some. So I'm already in this trade. I'm moving it down. Okay. Okay, flowing with the price. Okay. I can move my stop loss again. Down more. This is my stop loss, so I can move it down more. Okay, just squeezing the profit in as the price going down. All right. 26215. Good. I'm out of that trade at 262. Okay, 26. All right. What do you think? All right. That's a very fast trade, isn't it? Very fast trade. A speculative trade that was successful. So I'm out of that trade now. Okay. So what can you learn from that? What I will tell you now is that you have to understand what is happening here is that the price as the market did open, it just went up. And the zone of, you see this price action from here to here is what we call, okay, and then it will start going up to 78.6% Fibonacci retracement level. It's also a very important resistance level for Fibonacci traders if you want to learn more about the 78.6% Fibonacci retracement trading. Go to www.dayprotraders.com. Now, as you can see here, it's a resistance zone. So as I showed a bit of weaknesses, so professional traders know that level very well. So they bring it above the sweet spot zone. So after the sweet spot Fibonacci trading zone, the next resistance level is what? The 78.6% Fibonacci retracement level. This is what I'm saying to traders. The price does not go up or down for no reason. So price going above the sweet spot zone, where is the next key level? The zone between the 78.6%, this is what I say to traders, is another zone here between the 88.6% and the 78.6% level. That's the next zone. So from the sweet spot zone, the next zone is between the 78.6% and the 88.6% zone. That's where he went to. He went into that zone. I saw a little bit of weakness. I decided to play safely. It was a risky trade. And can you see? It worked beautifully. That's what we are talking about. So when you are scalping, sometimes we take risky trade calculated risky trade at a specific level, working with market principle. If they take me out, all you do, you just blink, 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 and take the next trade. As I showed you yesterday, I had a 2 losing trade and 2 winning trade. But you are not gambling. You know what is happening. Now, here we are. We are stuck below the next resistance level. Okay. I don't want to buy now. What I'm going to do? What should I do now? Okay. This is what we are saying. Now, it starts changing direction. This is it. Which market principle can I use now? You see now, which market you want to work with market principle. So what I'm going to do now, I'm going to apply again Fibonacci retracement to this price move. Okay, and I'll remove the first one. Okay, I'll remove the first one. Here we are. So apply Fibonacci retracement for the price action. Are you with me or are you sleeping? Okay, from here. Okay. To here, yes or no? So that's a Fibonacci retracement. So again, for that price action from here to here, where is the sweet spot zone? The sweet spot zone is here. I'm going to move this thing down, which is the 50. That's now we have a new 50% Fibonacci retracement level, and our 61.8% level is right there. All right. You see? So that's the new sweet spot zone for this price action from here to here. Are you with me? And if I decided to move to show you the next zone, I hope I'm not moving other line. Okay. That you must watch is the zone between the 78.6%. Here it is. Are you getting it now? So you want to work with market principle, all right, and flow with the price. So I do not have, so I only have the CCI on my chart here, and I am ready to sell or to buy on the edge. A scalping trade. So the scalping trade, so you are not going to be perfect at it in one day. So if you are struggling, don't worry. All you need to do is to concentrate on the risk control. So I have a 2 zone again. So it's a 50 zone between the 50% and the 61.8% Fibonacci retracement of which price action from here to here. It goes up from here to here, yes or no? The 50% and the 61.8% level is right there. And, okay, the 78.6% and the 88.6% is here. Those are zones. If you're a Fibonacci trader, you want to understand what's going on. So what is happening, the way the price reacted here, my intention, if I want to buy now, the best place for me to buy, or my expectation is that the price nicely pull back to retest this level. Why? That's a very good question. All right, let's continue with the discussion, concentrating on the market principle. So the 50% Fibonacci retracement level is, there is a market principle attached to it. So we say to traders, whenever the price goes above any 50% Fibonacci retracement level and the common center line is broken, this is an invitation to buy, meaning that if it pulls back above this zone and the common center line, so price dropping down, and touching that zone, and then the common center line is broken, that's my invitation to buy. Are you getting it now? Are you getting it now? So what I've done earlier on is that the price went above the sweet spot zone, above the 50% level. So in that case, I was using the market principle of price target. The price does not go up or down for no reason. So the next target zone is what? Between the 78.6% and the 88.6% zone. I saw a bit of weakness there and I sold it. All right? So this is what we are talking about. So if it goes above the 78.6% level, the next resistance is this one here, this resistance here. All right, are you getting it now? It's resistance here. All right, so you just push it. So you can see that since the market did open, it's just going vertical now. A bit of pullback, but it's just going vertical now. All right, so the bullish traders are back today, and they want to kick every bearish trader out of the market. All right. So my intention now is that it slowly but gradually pull back to retest the zone, and if it does exactly what I'm expecting, well, and the common section is broken, and I will be buying in that zone. Will it do it? We will see. So what I'm going to do now to avoid that the video is too long, because I'm waiting for another entry, I don't want to buy it here now. Okay, I'll prefer it to drop down a bit before I look for another opportunity to buy. Okay, so I'll pause the video for the first time with your permission. Okay, so what I'm doing before I pause it, here it is. And I'll color that line into turquoise. Okay, here it is. So you may say to me, Joy, why don't you sell it now? I could sell it now. I could sell it. But I don't want to take that trade. I don't want to. Right? It may drop down. It may drop down all the way here, but I don't want to take that trade. Why? Because the bullish traders are trying to force the price to go up more. So I want other traders to bring it here, and that will be a safer trade for me. All right. So I don't want to look for an opportunity to sell it down. All right. It may drop down like this. Joe, you could make a lot of money out of that, but I don't want to sell it now. I will prefer other traders to bring it here, and I will take it from them to bring it up. All right, because the market is bullish now, so I don't want to fight the bull anymore. I fought them here successfully, and I don't want to stand again in front of them as they are trying to push it up. So we will see. So pausing the video with your permission for the first time, and the time in London is 2 minutes past 3. So the 30-minute candlestick bar is closed now. So we are watching it now. So while you normally when we are day trading, we will go now to the 30-minute candlestick bar. Right. So you see a very long candlestick bar. So what you can do here, I don't want to draw another line. You draw a line at the high and the low. And the median line is somewhere here. You see here, it's somewhere near the median line where I want to buy it. Okay, that's the median line. But the bullish traders are not giving up. Okay, will they allow me to join them at one point? Okay, so because it just went vertical so far, so I'm waiting for those bullish traders to show me a bit of sympathy. All right, can we see that? All right, so pausing the video for the first time, and we'll come back to it if there's something. You see now, 22 minutes already gone. All right, speak to you soon. Okay, traders, I thought that I have resumed the recording. I was talking to myself. So there was a losing trade here when we had this candlestick bar, one up, one down. I took a trade here with a 30 pip stop loss. That was a losing trade. I hope I did mention it in this recording, because I thought that I resumed the recording only to notice that I did not press the resume button. So my apologies to trader. So I have another limit order here. That's there at 26349 to sell the Dow Jones. All right. Why? Again, the same reasons as we had here. One up, one down. So here it is, one up, one down. It's a specific candlestick bar. So I place my limit order here at 26349. As I showed you earlier on the 3-minute time frame, we are in a zone of 138.2%. See here, well, what is it? 138.2% Fibonacci extension level. Hold on, please. That's the 138.2%. See, we are approaching a target level. Price does not go up for no reason, because it goes above. There's a target level at 26413. That's why it's headed there now. So I'm watching that resistance zone carefully. So on a 50-minute time frame, was it 50-minute time frame? Okay, so we apply Fibonacci extension to this last move here. You see this section here, from here to here. So now we are now at that 138.2% Fibonacci extension level of this price move from here to here. It's a very, very important resistance. You see people are taking profit there, professional Fibonacci traders know that. So I'm going to move my limit order again at 26380. See the tail of that candlestick bar, I'll place it below. If they start selling it and it come down below that tail, I want to sell it there. It's going back above that level. All right. Okay, so I'll wait for another entry point, because my intention that they pull back a bit before going up. All right. Two C's. Okay. I place a limit order to sell here. I'll sell it here. It's a speculative trade to sell at 26399. So this is a profit target, 138.2% Fibonacci extension level. That's it. I'm now in that trade, and I will use 30 pip for that trade. 26399. Okay, bear with me, please. Drawing my stop loss on this chart. 26429. Quite far away, 30 pip. My stop loss is quite far away on this 3-minute time frame. So I'm going to go to the, I'm using 30p for that trade. 26429. Let's color that into pink. I don't want to use pink. I'll use black. All right. So I successfully managed to take a risky trade using 30 pip stop loss, and right now it's working beautifully. So the price now below my entry point. That's my entry there. Color it now into green. Entry at 26399. Are you following me? Don't sleep. That's my entry there, the green one. That's my stop loss, 30 pips above that. So I'm going to drop down 26399, my entry point. Going back to the 3-minute time frame, you're going to see, because we are expecting a pullback. So again, what I've done now is because the price was at the target level and we see a bit of weaknesses going on, and I want to take advantage of that. If there was no weaknesses, all right, I will not take that trade at all. All right. 26399, we are now at 26395, and we will see. So very nice place to enter the trade, which is good. Very nice. And my stop loss is above the 138.2% Fibonacci extension level of this price action from here to here. So it's a good place. So I'm hiding, so to speak, my stop loss behind that critical resistance level, 138.2% Fibonacci extension level of this price move from here to here. For those of you who are not familiar with the power of the 138.2% Fibonacci extension level, go to www.dayprotraders.com. The price now going back above my entry point. My stop loss is not challenged at all. It's quite far away here. We will see what's going to happen. So I'm staying quite okay, relaxed. Okay, I'm moving my vertical line here. Okay, maybe we'll have to pause the video at one point. So as I told trader, for live recording, it's normally a very long video, can be above 30 minutes. So you can see now the time is 29 minutes. I continue to record the video to show you everything that is going on here. At one point, we may have to pause the video to save a bit of time. So with your permission, we will do that, okay, at one point. But right now, I'll let it run, okay? Keep watching, please. What I'm going to do, because I said what I need to say, I'll put my microphone down, all right, so I can drink my tea here, all right? traders, I'm still here. As you can see, we see a bit of a capitulation of the bullish traders because you can see that where we place this vertical line, you see here, that one got a shadow on top. So the price went above the 138.2% level, trying to escape the bearish zone, that resistance in red here. So this is the activity of the bullish trader, try to push it away from that resistance level. But they have failed. As the price came down, okay, you see the tail of this one, it went down. They managed to push it back up. They want to survive. But look at this candlestick bar. If this candlestick bar is bearish, meaning that it stays bearish as it is now, that will be what we call a capitulation of the bullish traders. Capitulation of the bullish traders, because they are trying to push it up. I can understand that, which I explained to you before. Yesterday was completely bearish. All right, the bullish trader did not control the price yesterday at all. The bearish trader controlled it. So this morning, they don't want to give any room at all for the bearish trader. So they push the price up vertically. You see here, it's a vertical price move. It's a distortion to a certain degree. Apply Fibonacci extension to this price move from here to here only. Now, as we see that, the last section of the price, which is from here to here, we apply Fibonacci extension to it. We highlight the 138.2% level. Because if the price breaks above this high, market principle, the next challenge for that bullish move is which level? 138.2% Fibonacci extension level at a 26414. The financial instrument that we are scalping today is the Dow Jones Index live scalping. The time in London is 37 minutes past 3 p.m. on the 13th of August 2019. Now, as I said to trader, my apologies to trader, my voice is a bit funny because I'm not feeling well, but I'm trying to do something, okay, to keep myself better. That's what I'm doing here. That's why I'm sitting here, all right, instead of laying in my bed, all right? All right. So here we are. So this is a capitulation. So I'm still in this trade. I explained to you before, all right? I entered the trade again. I showed it at the 26399, stop loss at 26429, all right? So this is my third trade today. The first one was beautiful trade. The second one was a losing trade. And this is the third trade. I'm still holding there. Why am I saying holding? Because you see here, they try to push it back up after I showed it to hit my support. They tried to kick me out of the trade. That was my stop loss in black there. But I survived. You see that? I survived that. I'm a survivor. I'm a survivor. Yeah? Can we see that? So now, after this candlestick bar is now closed bearish, I'm very relaxed because it's a capitulation of the bullish activity after they try to push it above the 138.2% level. There is a high chance that this trade that I'm taking on, the third trade, will also be a profitable trade. We will see. All right, we will see. We will see. All right, we will see. We will see. We will see. All right. So I'm going to move my bar. Okay, right there. I'm on a 3-minute time frame. But as I told traders at the beginning of this tutorial, my decision was not made on the 3-minute time frame. So everything is here. It's a long candlestick bar. What is that? We're talking about Fibonacci pattern. Okay. Trending phase. SA correction that did not cancel the trending phase. AB retracing the SA at 50% Fibonacci retracement level. Two Fibonacci patterns are coming to our mind are the bat pattern and the crab pattern. The target for the bat pattern is at 88.6% Fibonacci retracement of SA. The price is not there yet. It's stopped somewhere here. See, you see, today it just went up there. And I'm selling it now. I'm selling it now. Okay. Going back again to the 3-minute frame. So after this candlestick bar, I'm very relaxed. Okay. I will take some profit out of that trade. Hold on, please, traders. Somebody is knocking on my door. I'll be back in a minute. Okay, traders, it's working beautifully. As you can see, 26399. All right, we are now at 263 39. I'm going to move my stop loss, all right, down here, quite close to it, at 26346. This is to secure the gain. So for the TSTW, as well as usual, a trader that did ask me the question, how do we achieve consistent winning trade? As I said to you before, the first thing is to have a strategy of profit taking. If you do not bank it, it's not a profit. You don't want a winning trade to become a losing trade. So that was great. So I'm going to squeeze them more. Okay, that is, I leave my stop loss now at 26342. All right, the price now at 26332. So that's only 10 pips now. So 10 pips stop loss I have now. So you see my entry is still there, and I'm making sure I get paid. This is about consistent winning trade. So the next thing that I said to you also, the second rule to achieve consistent winning trade is to use market principle. That's what we are using here. Price goes up to the 138.2% level. We are looking for weaknesses. We are careful. So again, you see it dropped down. I'm securing my gain. You push it down more. Move my stop loss. I'm going to color my stop loss now into red so you can all see. Now I'm out of that trade. That's it. So I'm going to show you now. That's it. So I'm going to show you. That's what we call milking it. You are milking the trade. So here it is. So enter at 26399, exit the trade at 263. All right, 18. Isn't it good? All right, from 99. Okay. All right. That's 81 pips. 81 pips out of this trade. Scalping. 89 pips. That's why I say to trader, I love Dow Jones. All right. If you manage to control it, here it is. So to achieve consistent winning trade, strategy to take profit, securing gains, banking the profit. If you do not bank it, it's not yet a profit. Never allow a winning trade to become a losing trade. Second, to achieve consistent winning trade, we want to work with market principle. That's what I'm using today, market principle. So I hope as I'm recording live videos, today can learn from it. Even if you are going to enter a swing trade, do not use a market order. So suppose you want to swing trade, you want to buy or sell, okay? Suppose you, like this now, so I'm out of those three trades, two beautiful, gorgeous trade, and one losing trade of 30 pips. That's what you're saying. Losing trade do happen. So suppose now the priority is now I want to buy. I don't want to buy, okay? Suppose, okay? And I want to buy, okay? If you want to buy like this, okay? It's not good to just buy like the way it is now. You see now? It's not good to do that. Because, you see, it can just go down. As you buy there, it just go down. Okay? You don't want to do that. The next thing, if you want to buy, allow the candlestick bar on your entry time frame to close first. So now it's closed now. So if I want to buy, you see where it is now? If I want to buy, it will be better for me to put it above the high of this one. A little bit above the high. Because if it goes above that high, it means that it's becoming stronger. If I want to sell it here as it is, I will not sell it at the market price. I will prefer to sell below a low. You see, this candlestick bar was bearish. I will place it a little bit below that. Then I'm going to use a tiny stop loss and control the risk. So those are a few things that you can do to minimize the risk that you are taking, and also to control the risk. You are in charge of it, okay? So this is the reason why, okay, I'm recording this live video so trader can see me losing trade, can see me winning trade, can laugh at me, or can see, oh, George, is that how you trade? So with that, maybe they will learn something from me, or maybe from my mistake, they can improve, they can get better, they can get more confident, they can improve their own strategy. That's it. That's the whole purpose of live day trading. But as I told you before, as the market did open today, the Dow Jones went up in a vertical move. I told you the best place to buy is here. I explained it already. I'm not going to explain it again. All right, so we were telling you to go down to explain. So they push it to 138.2% Fibonacci extension level, or this price move. This is something we see all the time in the market. Price goes up from A. So this is for area wave trader. We can say first wave, second wave, third wave, fourth wave. All right, and then we say a fifth wave. And the fifth wave, we apply Fibonacci extension to the fifth wave. All right, so now it went all the way there. So in your way, trader will be thinking of what? A flat correction. Will he do that? We will see. I can keep milking it all the way down here. But I told you, because of what has happened yesterday, the market was bearish. The bullish traders are not at all in a good mood. So when we are challenging them today as a bearish trader, we need to be very careful. So that's why originally I was telling you that I will not sell it. I will prefer it to somebody else to bring it here before I buy. But I changed my mind and it cost me 30 pips. But I recover that by taking 81 pip in the next trade. So 3 trade, 2 winning trade, 1 losing trade. All right. So we will see what's going to. So because I'm a very experienced trader, some trader may disagree and say, ha, George. So I'll say that's my opinion. All right. Understand the price. So in the price can doesn't mean that no one knows what the price can do. But we can have a bit of idea what the price can do. It can do something like this. It can do something like this. It can. It does not mean that it will do that. It can do something like this. It can come down like this. In 5 more. 1, 2, 3, 4, 5. It can do that. All right? It can. This is what we call a flat correction. You see this move here? It went up 1, 2, 3, 4, 5. And then it pulled back. And it hit the 138.2% Fibonacci extension level. This is what we call the B manual wave or the flat correction. I mean, for area wave traders that are jumping and trying to smash their computer, please, this is what we call speculative area wave count. So you do search the phrase speculative area wave count by 24 Elliott wave. So you may understand what I'm talking about here. So we are not working with the Elliott wave rule as such, but we are just working with the knowledge of the Elliott wave theory to make excellent decisions. This is about speculative Elliott wave count. This video is not about speculative Elliott wave count. It's about Racy Scalping, a trading strategy, Dow Jones Index, live scalping. Scalping means we are getting into the trade carefully and we are making sure we get paid very fast. This is the scalping. And if you are scalping, you want to have a profit-taking strategy, so you are not holding them. You see now, when you want to protect your profits, some traders may say it's a day trading. So scalping is a day trading. It's a type of day trading. But when we are scalping, we are very fast. We are also speculative. We are taking more risk. And we are flowing very fast. We are happy with quick and fast profits. That's what we are doing. All right. Am I talking too much? All right. I hope my voice is clear enough for you guys. All right. So should we pause the video? So I put the vertical line there. This is it. It went down. You see, it bounced up a bit. This one can come down here and then bounce up a bit. And then hopefully, that's my expectation. It may bring it all the way here. We will see. All right. So this is about multi-talented trading. So I talk about multi-talented trading. So you learn something. Right? So suppose you learn about dynamic trendline, okay? And then you learn about Fibonacci extension, okay? And then you learn about divergence, okay? And then you learn about Fibonacci pattern. So there are different things that you learn, different strategies. But what I have noticed that a lot of traders do not develop the mindset of multi-talented trading. So when they are applying one strategy or one method, they forget about something else. So they concentrate only on one method. and they don't combine the different strategies. Now, if you are a new trader, do not worry about it because you are a new trader, or if you are a beginner trader, don't worry about it. You will catch up slowly, but just remember that. Just remember that. Slowly but gradually, at one point, you will start combining different strategies. So I'm talking about scalping, all right? I'm talking about market. You see, in this video, I was talking about scalping. We are talking about market principle, okay? We are talking about securing gain, profit taking, all right, being consistent, all right? We are talking about Fibonacci, all right? So those are different strategies, and I did talk about in-year wave and the in-year wave flat correction. And you see, so all together, so this is about the experience and using different methods. Yesterday, we were talking about Fibonacci pattern, all right? We were talking about convergence signal. We were talking about price target. We were talking about market principle. All right. So you may say, George, it's too much for me. Well, you will grow by all means. You will grow by all means. All right? But for some traders, some traders are not born to be day traders. All right. Some traders are not born to be swing traders. Some traders are not born to be position traders. Some traders are born to buy and hold. They can manage portfolio. All right. So a trader did ask me, so this is one of the reasons also I'm recording this video today. Say, all right, difference between swing trading and position trading. Is it better for me to be a swing trader or position trader? Or is it better for me to be a position trader than a swing trader? Now, if you look at it, you will say, well, that trader is supposed to know. No. This is a very important stage. The trader is at a stage, is at a junction where he is trying to define his identity. Are you getting enough? That trader is trying to define his identity. Now, he wants to know, should I become a day trader? Should I be a swing trader? Should I be a position trader? Should I be an investor? It's a stage, and he will go through it. And at the end of that stage, that trader will find out what he or she is best at. Now, personally, I see myself as a day trader more than a swing trader. And I know that. I know that I am a typical active day trader. But I can also swing trade. This is it. All right? I can swing trade. I can position trade. I can invest, buy, and hold. But if you say to me, George, just say one thing, who are you? I will say to you, I'm a day trader. I am a day trader who can swing trade, position trade, and invest. Now, another trader may say, if you ask the same question to another trader may say to you, I'm a swing trader, and that's it. Some traders are swing traders. And I had the TSTWSY as usual traders in the past who do not want to know anything about day trading or anything else. They are the purest swing traders. They are just swing trading. All right, that's it. They don't want to know about day trading. They don't want to know about position trading. They don't want to know about scalping. They are day traders. All right, this is it. There are also traders that come across traders that are just day traders. They don't want to know about swing trading. They don't want to know about position trading. They don't want to know about investment. So gradually, a trader will reach what we call a junction or a stage. Am I talking too much? Because we are just watching the price now. I'm not in any trade at all. So I'm taking that opportunity to just talk to you guys if you are still watching. All right, so this is it, the ladder. If we draw a ladder like this, all right, it's a stage. So a trader start trading, all right, he comes into the market, you understand the technical indicator, start placing a trade. All right, when the market is open, either he or she is swing trader, it's a ladder. So it's here, and then he move to here. And then he come in here, he start feeling dizzy, or he start losing, or he discover new strategy. Now, usually, when traders come across a new strategy that they embrace, that's where they get this kind of instability. So they start trading in a certain way, working with a certain tool. Then they come across a new strategy. Then they embrace that strategy. That's a new start. And with the new strategy will come new challenges. And the trader start wondering, who am I? But it's a stage he need to define himself before he or she can go to the next level again. So for that trader, it's better to stay at that level to redefine his identity before moving to the next stage. Or sometimes that trader need to come back to the next level below before defining again what is the next step. So what I have found is that a trader may be trading and being well, and then he or she may come across a new strategy or embracing a new strategy, and that trader may start experiencing what we call instability. Either that trader stay on that level until he or she will define his identity, he or she will define his or her identity, or that trader may drop down to the level below before moving up again one more time. Now, what I'm discussing here, some traders may find it a little bit boring, they may say unnecessary, but over the year, if you survive, because a lot of traders are not surviving the financial market, they are coming to the market and they are dumping money and going away. So if you survive in the market, you will understand what I'm discussing today. It's very, very important. Sometimes traders didn't ask me a question and they think that, George, I'm annoying you. But no, they are not annoying me at all. Understand? They are not annoying me at all. Well, okay, so what do we do? I'm going to pause the video now to avoid it too long. So before I pause the video, I'll remove all my drawing on the chart, and we're going to stay focused because we are talking about 1, 2, 3, 4, 5. The third one did not come down very much. It just went a little bit horizontal here. So there should be another move down and a bounce and then blah, blah, blah. Hopefully it will come to here. And if I'm about to enter the trend, or if there is something interesting taking place, I'll come back again and resume my recording. But for now, I think reasonably it makes sense that I pause the video. Here it's coming, okay? We'll see. So pausing the video for the second time with your permission, of course, because of the time. It's now 55 minutes since we are recording. Hopefully, we'll keep it a little bit above 1 hour, maybe 1 hour 10. That'll be reasonable for this recording. Yesterday was 55 minutes, so we are going above our average recording time. Okay, so pausing the video, and the time in London is, call it 4 p.m. London time. It's now 15, 59, 52. Call it 4 p.m. London time on the 13th of August 2019. Apologies to traders if you cannot hear my voice very well, because the Eagle trader is not very well. Okay, see you soon. Okay, pausing the video. I'll move it here before. Okay, traders, this is what we are expecting. As you can see, it's galloping down. Okay, hopefully we come to this level. This is a typical flat correction, an expanded flat correction. All right, so what I'm going to do, I'm going to pause the video again. So I need to remind the traders that are catching up with us that this is a Racy Scalping trading strategy, Dow Jones Index live scalping. All right, so I move my line now. All right, I move it now. Hold on, please. 1 second, please. I need to correct that because it's the long-term equilibrium price level for the Dow Jones. I'm looking in my book here. Okay, long-term equilibrium price level for the Dow Jones 26050. Okay. So stay with me, please. Bear with me, please. 26050 for the long-term equilibrium price level. That's it. All right, all done. Okay, so we are expecting it to go down. Normally 1, 2, 3, 4, 5. We will see how we're going to get here. That would be nice if we come to this zone. That would be a great place to look for an entry point. All right. So just to show you what has happened so far, it's doing exactly what we're expecting. So I could solve it here. See here. These are area weight traders. See the common center line is broken here. Okay, they sold it down. All right, very fast down. Should go down more. So pause the video again one more time, and we'll come back to you in a minute. The time in London is 21 minutes past 4 p.m. Okay, traders, we pause the video here. If you remember clearly right there when this candlestick bar came down, and this is what has happened so far. See here, so it came down, now it's going down. We will expect it to go down more because sometimes it can be a little bit tricky. I need to explain this to some of you who understand the Elliott wave theory. Is that what we are seeing here? Sometimes you have to go into the mind of other traders. So some traders may say, this is the first leg because I was telling you you should come down 1, 2, 3, 4, 5, following the C manner wave of the flag correction. If you understand Elliott wave pattern, some of those traders will say this is it 1, 2. All right, are you getting it now? And they will say we need to go into their mind. So they will say this is 3 right there. All right. And they will say this one here is 4, and they will say this one is 5. So those traders are the one pushing it up now. They will say it's finished now, it's going to go back up. But those traders, they need to be a little bit careful because they need to go into other traders' mind. Other traders that are calling it like this 1. So some traders may say this is all 1, this is all 2, this is all 3, this is all 4, and those traders will be expecting the 5th one when the first group thought that it's going back up. So this is it. The reality of the trading, the practical trading, the nitty-gritty of day trading, scalping, and so on. All right, this is it. So personally, I'll go with this one because normally in my mind, okay, if you understand what's going through my mind, I'll prefer, if I want to buy, I'll prefer to buy somewhere near this level. If we can't touch it, at least do me a favor, bring it somewhere here. But I understand what's going on here, which I explained to you earlier on. Yesterday, the bearish traders dominated the market. The bullish traders are not in the mood today to allow the price to go down a little bit. That's why it's struggling to come back here. We will see what's going to happen. All in all, another thing I want to mention to you very fast, if you are still watching it, thank you very much. Because most traders watch only 4 minutes of video. I watch sometimes 3 hours video on YouTube. Can you believe that? 2 hours of video watching from the beginning to the end. Because the topic that I'm watching, I am interested in it. And I choose the best time to sit down and just enjoy the whole subject. Traders are different, okay? Traders are different beasts. Traders are different beasts. So this is my trading setup that I'm playing with on the 3-minute time frame. So I'm not making my decision on the 3-minute time frame alone. There was a move up. We call this one X, A, B, C. Will it form that flag correction? What I want to highlight to you now, okay? I'm going to move my vertical line, okay? Remember, moving it away, okay? What I want you to tell you now is that this, okay, you see here, this is something, some of you that are playing together with this, I know some trader bought it today because they watched the video in full yesterday. What I want you not to forget, though we are expecting a Fibonacci pattern, the price does not have to form it. Have I said it before? Yes, I did. But it's going one step at a time. So anything is possible. The thing I want you to remember, this is it. You see where the price did stop now? Today, you see that's kind of about a 4-hour top frame. Where the price stopped at 138.2% Fibonacci extension level of the last leg of that move up. You remember that? All right, you did. Where we are now is what we call the NAT. So no more chart pattern trading. This is what we talk about, multiple talent trading. So I'm talking about Fibonacci, blah, blah, blah. Okay. No more chart pattern traders. I'm going into their mind now, okay? They are calling this a double bottom chart pattern. They see that this is a double bottom chart pattern. So they are watching this level, the point B here. So for this thing to complete a bullish move, the challenge is that resistance at 138.2% level. You remember? That's the NAT. So if you are following us at the George Trio channel, all right, I recorded a video about a MACD setting, and I was talking about high probability trading setup using the MACD 824.9. And I was telling traders double bottom, a MACD crosses above a signal line, a double top, a MACD crosses below a signal line. But when you see a double top or a double bottom, do not forget the nuts. Though the pattern of a double bottom is being formed, the neckline of the double bottom is a very important resistance level. And for this, Dow Jones is coinciding with that 138.2% level. You see where we are now? This is a very important resistance. So remember that. So if you are playing this, remember that that B there is a very important resistance level. So if the price, if you pull back nicely, that will be great. And then we take it up above the point B. We will be looking for another bullish opportunity one day, if it happens. If it does not happen, then we can't talk about it again. If one day it breaks above the point B here, and then we will expect it to retest it, or if it doesn't retest it, to form a higher low, common centralized broken, and then we implement a top-down trading method or use the TSC WSOSU 08 or 24 to trade it up if, all right, the bullish move continue. So right now, the price can turn around where it is now and come back down. So if it's coming down, that's what I'll say to you. You want to watch that 50% Fibonacci retracement from here to here. That's why I was telling you to calm down. It's coming down. That's the first target. If you break below and retest, then we can come back here. Nothing can stop the price to continue to go down all the way, even going below this one. So you can turn around here and go back down without seeing that move that we are talking about here. So this is it. When the pattern is being formed, okay, we are taking everything into consideration without assuming anything. This is the whole purpose of me sitting here talking to you for more than 1 hour. So you may see in real time all the blah, 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 blah that I've been talking about in a normal video, okay? So this is it. All right, one more time, okay? Because you are still watching, which is good. Some trader could not watch a video for 1 hour. They find it's too long. You have to take it serious, okay? Take it serious. If it's a subject that you want to understand, you can watch video for 3 hours on YouTube, even 5 hours. All right? Take it from me. Just take it serious. Just give your 100% into it. If you do not have time, okay, you can watch it 15 minutes. I watch videos sometime that way. Because I don't have time, I may watch a portion of it. I remember, I say, stop at 1 hour, come back again, resume it, watch it in full. Why? Because I care about that subject. That's all. Because we don't, you don't want to get, okay? If you are interested in a subject, all right? If you want to learn, unless you are very experienced traders and you don't need any more teaching, that's different, okay? So that's nothing we can do about it. But if you are somebody who is looking to learn, take it from me, try to watch videos in full. I mean, if it's a subject you are interested in, give yourself enough time to watch it. Sometimes it's just one thing a person may say. I remember, am I talking too much? Because now we go over our time and it's going blah, blah, blah. Maybe I'll pause the video, I'll stop the video soon because it will take a longer time to bring it here and then we take another trade. So I will stop it so we do not go over 1 hour, 10 minutes. So I said everything that I need to say. You can see here it's turning around. This is it. One group is thinking that it's 1, 2, 3, 4, 5 completed here. Another group thought that one more will go down. This is what you can expect here. All right. But the point I'm making is that, okay, if you want to learn something, all right, behave like a scientist. You know the scientists? Have you ever heard about somebody called scientists? Those are people who lock themselves in a room days, even months, for ridiculous subjects. You may think that this is ridiculous for them, but for them, they can do that. They can just lock themselves in a month just to find out, all right, the behavior of oxygen, for instance. Now, for a normal person on the street, that's a waste of time. But for a scientist, they will sit down watching that thing, all right, just that thing. The whole day looking at water, for instance, water dropping from 2 meters above to the ground. How is it hitting the ground? And you sit down there day in, day out, just watching that. So if you are passionate about trading, if you are passionate about day trading, if you are passionate about scalping, swing trading, I mean, either you want to do it or you don't want to do it. My recommendation is that go 100%, go full Monty. Can we use that well? I mean, just give your 100%. Now, so the trick that you must do is that you don't want anybody to disturb you, to find your time and to sit down and do it. You say, okay, I have 2 hours now. This is what I want to do. Now, I can understand, all right, sometimes, especially when people are working, they come back from work, they don't want to sit down watching 2 hours video. You are already tired, you're not going to watch 2 hour video. So 10 minutes, 15 minutes, okay, you want to watch many videos that are short videos. That's normal. But there are times when you're going to sit down and eat the whole food and wipe the plate. How you understand it? It's like eating spaghetti, you finish and then you use the bread to wipe the plate to eat your, okay, or you are eating chicken Caesar, all right? All right? Or you are eating your spinach salad, all right? You're going to wipe the plate. That's what we're talking about. So the reason why I'm saying this, I know what's going on behind the scene because with YouTube analytics, I know the average length they spend on videos. And it's shocking to me. And sometimes I'm thinking, oh, is it worth you recording video more than 10 minutes? Because most traders are watching the videos only 3 minutes. So why should I waste my time recording a long form video? Or should we just touch upon the subject without not going too deep? Okay, so this is it. The creators and the consumers. So, but I'm just talking a bit too much today. Maybe that will wake up some traders so they may start taking the correct step because you will never going to achieve or reach a higher level if you are not giving 100% in anything. That's what I see it. So you want to do something, you are in a relationship, you give your 100% in it. Or you are passionate about something, you go into it 100%. So this is it. Are you in 100% or are you in only for a while or for just for play or for hobby? This is the question. So I leave it for traders. All right? Everybody will decide. Some traders, they are in need for entertainment or for fun, or they are in need for different reasons. So I can't make that decision for traders. But I'm just in a mood of talking a bit too much today. So I hope I haven't upset anybody. And this is something because if I talk about my own experience, all right, I remember years ago when I will from Friday to Sunday, I'll sit down watching video. I remember the first time I watched a video about pitchfork tool, and I said, "What is this guy talking about?" He placed it on the chart. I watched that video many, many times. And another time, there was another one talking about Fibonacci extension, and I said, "I never heard about that." And I'm just go on YouTube consuming every video from the starting point to the end just to understand it. And if you are like me, I'm somebody who always like to understand things, and a lot of traders are like me. I see sometimes traders purchase ESCW24 or XYZ, and those traders will be asking difficult questions, and they will say, George, I hope I'm not bothering you too much. But I'm just like them. There are people who want to understand more. That's it. So, all right. Let's not go away from the topic. We were talking about Racy. So here we are. All right. So 1 hour, 40 minutes. We're going to wrap it out. It's going to take a bit of time before it comes here. I will see whether there is another opportunity, and I will take it from here. So remember what I said about that double top, double bottom on the 4-hour time frame. If you are somebody looking at it, so on the 3-minute time frame, do me a favor, draw that trend line that I'm drawing on my chart. Okay, you don't want to violate the market pattern. It's going above it now. Okay, so for me personally, if the price behaving like this, I'll stay a little bit calmer. I don't push it. So you have a 2 winning trade, gorgeous, beautiful winning trade, 1 losing trade, 30 p. You don't want to waste it. This is it. So as the trader did ask me, how do you achieve consistent winning trade? You don't want to give up your profit also. All right. So talk about the strategy of grabbing profit, apply market principle. All right, you understand that? And also not giving back the profit that you already have. So someday trader may make 100p profit, and then after a while they feel bored and they take a 2 ridiculous trade and they give back all the money back. I don't do that. So if you take, for instance, 100p profit, make a decision. How much will you give back? If you're going to play it again, say, I'm not prepared to give more than 40% of my profit already attained. So if they take away, if you have 100 pip originally, and now you decided to take other trade and you lose 40 pip, it's time to go home. So you want to close that day as a winning trade. That's it. Yesterday I took 4 trade, 2 losing trade, okay, 2 winning trade. Now I was in a situation where I was about to take minus 6p plus. I managed to close it profitably. So it was a winning trade. That feeling will keep you going. So 3 things, as I said before, right? Strategy for grabbing profit, securing gain, very, very important. Applying market principle, very, very important. And not giving back profit. Okay, that's it. If you have any question or suggestion, please put it in the comment section. And of course, I will be recording another long video like this, all right, to answer your specific question. So if this video has been useful to you, please let us know by giving us the thumbs up. All right, if you think that, George, you are taking it too far this time, okay, I don't like it, mark it down. I want to know whether you like it or dislike it, all right? However, if you think it's an essential tutorial that can help day traders and scalpers, Dow Jones traders, feel free to share it on the social media. Now, some traders, especially TST traders, told me that, George, I already share your video. Well, you are a special being. I take it from me. You are a special being if you are sharing my video. Okay? We wish you the very best in your trading. And until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about what? Racy Scalping, trading strategy, Dow Jones Index, live scalping. The financial instrument that we are analyzing today is Dow Jones Index, my favorite index. Move very fast, it's very friendly, very liquid. The most important, you want to get it right and be very, very defensive. All right. Thank you for watching, and I will speak to you soon. Happy trading to you all. So, as you can see, live day trading can be longer than the normal video. So don't criticize it, don't mark the video down because it's long. It should be long because this is about live trading. Thank you for watching, and I will speak to you soon.